Join me as I dive deep into the world of startups across the globe in 2024 to uncover the harsh realities many new businesses face. While entrepreneurship is booming worldwide, the hurdles are more daunting than ever. Whether you are a founder in Silicon Valley, a tech hub in Nairobi, or a startup enthusiast in Berlin, the challenges are widespread, and understanding them could be the difference between a startup that thrives and one that fades away. Across borders, funding remains a huge global hurdle in 2024, with a significant drop in venture capital flowing into startups worldwide. In fact, recent data shows that global startup funding dropped by nearly 20% this year due to economic uncertainty, increased interest rates, and geopolitical tensions. Investors in Europe, Asia, and North America alike have adopted a more cautious approach, preferring safer, lower-risk investments over high-stakes startup ventures. As a result, early-stage companies in emerging economies who already face an uphill climb are feeling the squeeze more than ever. For instance, Southeast Asia saw a significant decline in tech investments, with countries like Indonesia experiencing a 25% drop in startup funding for fintechs, historically one of the region's strongest sectors. Meanwhile, in Africa, where startups were thriving and investor interest was at an all-time high just a few years ago, the funding landscape has shifted, with investment volume shrinking by almost 15% compared to last year. Across continents, the ease of launching a business has also led to market saturation in many industries across the world. In India and China, the e-commerce and D2C markets are becoming increasingly crowded, making it hard for new startups to differentiate themselves. Similarly, in the US and Europe, the tech sector is saturated with companies vying for consumer attention, especially in fields like food delivery, ride-sharing, and online retail. For example, in Europe, over 60% of D2C startups are struggling to scale due to fierce competition and high customer acquisition costs. In Latin America, where fintech and e-commerce are thriving, startups are finding it difficult to stand out amid a surge in new companies targeting similar customer bases. Attracting and retaining top talent is also an issue that startups worldwide are grappling with in 2024. In markets where top talent is highly concentrated, such as in the US, Western Europe, and parts of Asia, startups are finding it difficult to compete with the lucrative salaries and benefits offered by big tech firms. This is not limited to Silicon Valley. Major tech hubs like Berlin, Singapore, and Toronto are all facing similar challenges. A recent LinkedIn study found that 80% of startups in competitive job markets cite talent acquisition as a major hurdle. In Africa and Latin America, where startups are often under-resourced, there is a distinct challenge to retain talent, as many skilled workers are lured by remote positions from more developed markets offering better pay and benefits. As data privacy and cybersecurity regulations continue to tighten, compliance has become a costly burden for startups worldwide. The European Union's GDPR has influenced similar legislation in other regions, and countries like Brazil, India, and South Korea are implementing or strengthening their own data privacy regulations. These laws, while necessary, are costly for small businesses trying to stay compliant without sacrificing product development and growth. In the Middle East, new regulations for data handling are impacting fintech and healthcare startups particularly hard, forcing them to reallocate resources to legal and compliance teams at the expense of innovation. In South America, particularly in countries like Brazil, startups must also comply with the LGPD, a Brazilian version of the GDPR, which has increased operating costs for many small companies. High inflation, rising interest rates, and geopolitical conflicts have made funding and borrowing far more costly. In emerging economies, these financial pressures are often magnified. Interest rates have increased globally, with average business loan rates rising by about 2% across multiple regions in the past year alone. Emerging technologies like AI, blockchain, and 5G are transforming industries and raising the bar for innovation worldwide. Startups from Israel to Japan are racing to adopt these technologies, but the cost of keeping up with innovation is high. Many startups in Southeast Asia, for instance, are finding it tough to compete with well-funded tech giants from the US and China who are dominating the AI and Web3 space. Globally, consumers are placing greater emphasis on sustainability and ethical business practices. Recent surveys show that 73% of consumers worldwide prefer brands that prioritize environmental responsibility. In response, startups across continents are trying to integrate sustainable practices into their business models. European startups, such as those in the Nordic countries, are leading in sustainable practices. But companies in Asia and Africa are also seeing growth in eco-conscious sectors, particularly in industries like agriculture, fashion, and renewable energy. The most promising future lies in sustainable, socially responsible business models, something consumers across the globe are demanding. Globally, 50% of startups that adopt sustainable practices are seeing stronger customer loyalty and brand recognition compared to their counterparts who don't. Entrepreneurs worldwide need to stay agile, adaptable, and attuned to regional as well as global market shifts. Whether in Lagos or Los Angeles, startups that innovate responsibly, manage resources wisely, and focus on real customer needs will be better positioned to survive and thrive in today's complex global startup ecosystem. What is your take on the global startup landscape in 2024? Share your thoughts in the comments and don't forget to like, share, and subscribe for more stories and reports that matter from around the globe. Thanks for watching. See you next time.